All right, guys. So let's just jump right into the charts here. So just want to go over a trade today that we took on gold. Yes. So we took a trade on gold. And one thing you want to pay attention today, guys, is that gold was on a downtrend. So we've been on a downtrend. So when I took this long, it was also knowing that we were in a downtrend on the 1 hour. So what I want you guys to pay attention to is I first we had the support here, which was resistance. And once the price broke above this support, which was resistance, so we were in this downtrend, consolidated, headed lower. And then once we broke above here, I was looking for buys in the market on the 5-minute time frame. So now when you see the candlesticks break above support and have a massive, volume candle, normally that's an indication that when the price does come back down to it, the price is going to hold. So we were looking for longs on the first bullish candle. So I actually got filled a little bit further just because the spreads were a bit larger when I entered in as well. Powell was talking shortly before I entered the trade. So yeah, so I did get filled a bit larger. So yeah, guys, so really right here, all we waited for was the price came down, consolidated, we broke underneath this support. So if we actually look at price raw, like if we have the playback tool, we made the support, and then as the price broke down, we're looking for price to break above this level, right? So the price got rejected twice, and then we broke above. So once we broke above this level, I was waiting for price to come down and test this area. And then also what we did was we drew our fibs from point A to point B here, and it lined up with the 50% on the fibs. Normally I do prefer the 88, 70, 78, 61.8 and 38.2, but 50% does work as well. So once we saw that bounce, the moving average is pointing bullish. The price was over the moving average on the 5-minute, and we entered the trade. Now we closed 50% of the trade here because this was a demand zone, a supply zone, and because we were in a downtrend, we didn't want to hold the trade much. We wanted to protect some of our capital in case the trade came back to us, just because we are in an overall downtrend on the larger market structure, right? So the price hit our take profit, and you can see that as it is standing now, we're probably going to continue maybe in a more bearish flow, because you can see the chart in general, we are looking bearish. So yeah, all right, guys, so let's look at Bitcoin. And let's see how that's doing. Let's see how Bitcoin's doing. The S&P 500. We can see the S&P 500 right now. At the moment, it has bounced, right? We've bounced here on the support, just like we were talking about the last couple days on this channel. We're waiting for the price to break above this to have a price discovery for the new market cycle. So let's look at the BLX. And what we're looking for, guys, is that right now price, we may have a retracement in price, and we have had a lot of bullish news with banks and opening an ETF and other things. But what you want to keep in mind is that we are at a resistance. We are at a resistance in the price, and so the price can come down. I mean, this resistance also, price action goes all the way over here. So it is normal if the price does come down to this level. So if it does, what we'll be looking for is for us to not break below, this area right here. So until we break below this area, we're still bullish. So if we come here and head higher, and we're still bullish. But if we break below and then start heading lower, the price for us, we would start looking at, hey, maybe the cycle is actually going to have an extended bear market. But as we see it now, this is still smart money accumulation. We have this trend line here where the price has broken out of, you know, and are retested as well. And this dash line is a 2017 high, right? Over here. So it's a 2017 high. So what I would consider for you guys is just to understand that right now smart money is accumulating, and while it is accumulating, you can be accumulating too more Bitcoin than altcoins. I wouldn't really look at until the Bitcoin dominance is taking more of a break, or we've broken the all-time high of the previous cycle. So we would need to at least see the Bitcoin dominance breaking down below this level here, for us to really consider at this moment. Now, if we consolidate, you know, if we start heading here and then we consolidate and then we start heading lower, then I'd be looking for this low for us to break below, for us to enter buys on altcoins. But yeah, so this is the next resistance that we're looking for the Bitcoin dominance. And if we do break through it and head more bullish on the Bitcoin dominance, we still would not be looking to enter altcoins at the moment. Right now, Bitcoin is going to be leading the market for a little bit, while retail investors are not really looking into getting into any altcoins at the moment. And you have to remember, this is a whole cycle. This is literally every 4 years, and these cycles is more than just like, how do I say, a fluke. You know, you go to school for 4 years, you go to university for 4 years, you go to high school for 4 years, and if you actually reflect on every 4 years of your life, there's always been some type of hype, and it's literally just more predictable than you think. It's just that when your emotions are involved, you can't see clear, right? So it's just as like when I was in high school, there was these things called VERF and Vima and VERF, the multi-level marketing. And then as I was in university, they started talking about Bitcoin at $500, and that, you know, and then it's the same thing on the news. There's kids getting rich out of nowhere, and then they lose it all, and then they have to, you know, go work or something. But this is more than just a random cycle. This is more predictable than many people think, and it's not just Bitcoin. The S&P 500, you know, we're looking, it's going to be lining up similar to how the Bitcoin chart's going to be lining up once we get into price discovery. And, you know, this is going to be a great opportunity for a lot of people. You know, at the same time, this is not financial advice, guys. So, you know, do what you must at your own risk and your own financial capabilities. One thing that I've definitely learned is just preserve your capital and don't compromise your lifestyle for any type of investments, you know, and understand that media, people, most of it is just trying to bring you in so you can lose anyways, right? Yeah, wealth is a slow and steady. You can get rich quick, but the mindset to be wealthy is something that takes time to understand, and you kind of have to callous your mind over time to understand, like, when you lose, it does take some time to make up what you've lost. So getting rich quick is one thing, but then when you lose it, sometimes you might go through a little winter just to get it back, right? So consider that this could possibly be the beginning of the next bull market. We have the halving here on March 2024. So we're not that far away, right?